Ladies and gentlemen, Keiki here. Welcome to the daily update. Hope you guys had a good day trading today. Market is down 0.7% there on the S&P. Nasdaq down 1%. Semiconductor Dow looks like they held up a little better. Russell 2000 about 1% negative. Similar with transport. Banks green today. Energy down 0.5% along with the biotech and healthcare. Home meters down, utilities down a little bit. Retail pretty much flat. Emerging market also kind of flat there. Bitcoin up a little bit, 4%. Gold, silver, miners did get hit today. Dollar flat, slightly green there. Oil down, treasury bond flat. VIX pop. Let's look at the S&P 500 ETF. Spider, 65-minute chart here. So this is where we closed yesterday. And this is where we opened up today, right? Right there. So we actually saw a gap down. So bears are practicing what bulls been practicing prior to this price action. We talked about how a lot of times when the short-term moving average is there, and that short-term moving average has been really aggravating the buyers, acting as resistance for about a month or so. And you can see bulls gapped above it, what I call jumping over the fence. Right? And bears be like, you know what? I don't want to deal with that resistance or that potential support. I talked about on the last night's video that short-term moving average does carry certain weight. It does have pretty decent resume because it's been acting as pivot in the last month or two, acting as resistance and support. So when it came down to it yesterday, bears be like, I don't even want to deal with that. Because, if we see any kind of pop from here, bulls, they can just bring it back up just because of momentum. The short-term to mid-term momentum on the buyer side. So what the bears decided to do is, let's not deal with that moving average. Let's just gap it down, make this transition as smooth as possible. And that's why we saw that. It looks like they gapped it down. But I think once that gap down occurred, you can see, looking at this upper wick here, bulls did good. There was some good attempt to fill that down gap, knowing that when the gaps are not filled, it's gonna make things hectic for the buyers because this is a down gap, right? However, with much of attempt and a lot of work that went into that first hour intraday price action, bulls were not able to fill the entirety of the down gap today. And with that, inevitably, price came back down. You can see that. So that gap wasn't fully filled. The down gap I'm talking about that opened up this morning, bears came in. But the opposite is true. Because this up gap right here, bears fill the majority of it, but not the entirety of that up gap. Similar to here, right? The up gap remains open. I tweeted out this morning that it will be better for the buyers if they can protect at least a little bit of this up gap that opened up early December, right? About a week ago or so. And you can see with that, the entirety of that gap wasn't filled, similar to here. And then bulls brought it up, right? So kind of reclaim that mid-term moving average. We're kind of hitting that short-term or the micro-term resistance right here. And we kind of hang around there. Keep in mind, though, when it comes to short to micro-term, chart has been damaged because we're now back below the short-term moving average. Bears opened up, the down gap wasn't fully filled. So in the short term, I'm going to label this market hectic. In the micro term, benefit of the doubt goes to the sellers. But in the midterm and the long term, obviously, bulls are still, the market is still favoring the buyers. But I'm talking about the short term and the micro term. Things going to be hectic unless bulls going to find a way to get above. For best case scenario, we'll be gapping up above it because once we see bulls get up and fill this gap, it's going to act as resistance. Keep in mind that short-term moving average that we've been talking about, well, that's been acting as a very solid pivot. You see here, every time, what does a pivot mean? Pivot means every time you hit that level, the trajectory, right? The direction of that price, you know what I'm saying? It like goes the other way, or it changes, right? It's a pivotal level. Either like, you know what I'm saying? That price has to like break through or push through, thrust through it, or it changes its direction. And so that's why, it has pretty significant presence when it comes to the short-term sentiment of things. So you can see if this thing kind of gets back up here, not only you got the gap fill area, it's going to act as resistance. The short-term moving average could act as resistance. You can see last time, things were not too, happy for the bulls. Every time when that short-term moving average acted as resistance, and you can see it, that's kind of what I'm talking about. So best case scenario, I don't think the best case scenario, I think, for the bulls is just gapping it up either tomorrow or this week sometime. You know what I mean? That's not a huge gap. I guess they would have to do like 0.7%. If they do it here tomorrow, or if they get it up a little bit and then do it, they will be looking at 0.5% or so. That's the best case scenario for the bulls. If not, bear's gonna try one more time. You see, bear's gonna try one more time trying to fill this gap right here, that remaining open. So bulls need to protect this gap. If that gap isn't protected, let's say if bears come down tomorrow, right, and fill this gap, and then this down gap remains open, right, and then the short-term moving average is still kind of coming down like this, I have a good feeling that bear's going to try to bring it down even more to about 456. So I think battle of the gaps is going to be key levels to watch this week. Battle of the gaps. Down gap, up gap. Which one is going to be filled first? And that's going to set the tone, I think, for the remainder of this month. Let's check out that oscillator and see if we can extract any more information. So, well, thankfully for the bulls, we're getting into the kind of a first stage of the oversold level. Here, I'm going to move this up here. So that's the first stage, right? Where you can see, because it's been respected as oversold level since October. October, November, December, 3 months, right? We're hitting that first stage of oversold. We're not at extreme oversold. Extreme oversold will be here, right? That's extreme oversold. We're not at extreme oversold. We're at oversold. So bears are starting to get tired here. And then we did see a little bit of bounce on the 6th and 5th hour there. So we got a little bit of momentum going. We did hit that, first stage of oversold level, not extreme oversold. Bears can still bring it down if they really choose to and fill that gap at 458. So going into tomorrow, right? Now you can clearly see the objective. For the bulls, gotta fill this gap, thrust above that short-term moving average, gap back about 467 level, best case scenario, gapping it over because of that level. This level is going to act as resistance. I'm going to put this right here because that level is going to act as resistance. 466, 68, 467, it's going to act. Not to mention, that's a level, that's a pivot. That's a horizontal pivot. You can see that level has been acting. So it's 466, it's almost like a triple resistance. We got short-term moving average in that vicinity. We got the gap, down gap area, and the horizontal pivot. Similar to 460 and 458, right? So battle of the gaps. Let's see how the market plays out. I'll come back for you. We'll reassess the situation. Enjoy your evening and good luck trading tomorrow.